It's David Wagner, portfolio manager at Aptus Capital Advisor. Up first is Boeing, a sort of stock of the day, down following that incident with the 737 MAX 9. David, what's your trade here? Do you buy this sell-off? Is the sell-off overdone? What do you think?
Tyler, I think it's overdone here. You know, I thought the price action that we saw this morning was a bit draconian. Luckily, the stock has started to rebound since the opening bell, but I see this price action is overdone really because of two different reasons. First, the MAX 9 represents only about 16% of the MAX fleet, and the MAX 9 is only about 2% of the company's backlog. Secondly, it seems like this is a one-off manufacturing issue, as the earlier generations of the 737 ERs had the same exact approach to the store, and there's no incidents on like a million or so flights. So I don't believe that this incident should really have a significant impact on the Boeing manufacturing ramp, but it does highlight, you know, a history of quality escape problems for the company, and these problems just aren't acceptable in this type of industry. So hence why you're getting a little bit of a discount
Just
here.
For the record, do you own it personally, or does your company have a stake in Boeing?
Our company has a stake in Boeing.
Okay, great.
And let's move on from Boeing to Crocs. Going the other way today, posting impressive guidance, strong outlook for 2024. The shares are surging 20% now. They just keep going. David, are they ever going to go out of style?
I hope not, because I'm wearing them right now. Unfortunately, it was soft. But, Kelly, I've been known to say on this program for a long time that I don't believe that brands matter unless you're Crocs or Busch Light. And the announcement that you saw this morning at the ICR conference down in Orlando just shows the powerful growth story for this company, not only for how the brand matters here in the U.S. domestically, but also internationally. We know that China grew by like 90% last year, and there still appears to be a long runway for growth in Asia as a whole. But more structurally, I think that investors have learned that Crocs brand is one of the few brands that performed well during COVID and out of COVID. I think most other brands really can only say they did that on one side or the other, but not both. But if there was a black eye for this company, I think it's easy to point to that Hey Dude brand. Counts for about 1/4 of the sales of the company. It's more of a turnaround story. But the good news for me, in my opinion, is that the company really de-risked that narrative on their last earnings call. So, Kelly, Tyler, bottom line, I think you really strap these clogs on, you know, put them in four-wheel drive and hang on for the ride.
All right, let's go to Five Below. The company expecting strong fourth quarter and full year fiscal 2023 results. Shares of the value retailer down today, down about 10% in the past week. So how do you trade this one, David?
Yeah, Tyler, I'm not a buyer here on Five Below for a few reasons. But if I was a buyer in this name, it almost feels like I've really missed out on the story given where the name trades from a valuation perspective. The valuation isn't palatable for me whatsoever, trading at 32 times forward earnings, though I would say some believe that it is warranted. I mean, the story for Five has always been about unit store growth. I mean, Tyler, find me another retailer that's grown its unit stores by 15% on an annualized basis, not just in the past, but in the future. You really just can't. So I understand where they've gotten that robust multiple. But the thing for me that really caught my eye on some of the management's commentary this morning down in Orlando was the expectation for increased costs regarding unit store construction. So if there's any type of hiccup in this nature, you could see the main catalyst for that premium valuation really go to the wayside. And I think that the shares could hit even more of an air pocket. So that's why I feel like I've missed out on the story, and I'm remaining on the sidelines.
All right, David, thank you very much. David Wagner, Aptus Capital. We appreciate it.